Now we're going to start with another deduction, which is self-employment deductions. Now see more on this when we go later on and progress a little bit more towards understanding this entire thing. But right now what we've done, we are still on the adjustments. We've done whistleblower, we've done IRA deduction. Now we're moving to the self-employment deductions. Now, as far as the EA is concerned, self-employment deductions is not a topic that they have drilled down a lot and gone to a lot of detailing. In fact, there would be a portion in part 2 we are going to discuss this in much bigger details or much further details than what we are doing today. Right now, just the idea is, if you are self-employed, is there any other deduction that you could take above the line? The answer is yes. If you're a self-employed, you pay both the FICA taxes for yourself as an employer as well as an employee. So the employer's portion of the self-employment taxes that is applicable for a self-employed is deductible, where above the line as an adjustment. So typically half of self-employment taxes that you pay, which is the employer's share, can be deducted here. We have a really detailed discussion on this later when we go to part 2, I think. But right now, this would suffice just for you to understand that there's something called the Federal Insurance Corporation Act, which typically means that you would have to fund for the Medicare and the old age and the Social Security benefits, and because of which every employee has to pay and every employer has to pay a similar part. If you compare it to India, we have something very similar called Provident Fund, where the employee part gets deducted from the money that he or she is making, and the employer contributes an equal share. It's nearly the same thing, but there are certain more components out of this. So what do? We take half of FICA taxes and we put it as a above the line deduction because you are the employer and you are the employee. How do you calculate these taxes? You have to take net self-employment income and take 0.9235% of that. See, if you look at FICA taxes, there is 7.65%, which is the employer's contribution, and 7.65%, which is the employee's contribution, totaling to around 15.3%. So what we are saying is, we are taking the entire amount and we are taking the part where you are paying the FICA taxes so basically when you take the net income, you will deduct the FICA taxes that is applicable for the employee share, and then the employer's share will be on the figure which is calculated after deducting the employee share. So 7.65% if you take away, so you take your self-employment income and you multiply it by 0.9235. That part is actually the income on which you will have to pay the FICA taxes, basically as an employer. So take half of that and that will be allowed as a deduction. See, when we go to the other part where we're explaining the provisions for the taxes in great details, that is the time where we're going to dig further on this. Right now, I'm going to ask you to take a little bit clerical approach here. Just remember, whatever is the self-employment tax given, if the taxpayer is, whatever is the FICA tax is paid, if the employer is self-employed, you have to take half of that tax and that amount would be regarded as a deduction. There are some limits. Again, we are not getting into too much technicality here because the calculation part of it is outside the scope of the EA Part 1 syllabus. 100%. So if you're self-employed, half of the self-employed FICA taxes paid, which represents employer's share, is treated as a deduction. If you pay for health insurance, even if it is for the company's benefit, because if the owner dies, then the company does not survive. But still, the way we are going to look at it is, when you take the health insurance as an owner or a self-employed, even if it is going to benefit the business, it is your personal expense. So where are you allowed to take this? We take 100% of the self-employment of the self-employed health insurance premium paid for himself, for his spouse, and for the dependents. So 100% of self-insurance premium paid for the taxpayer, the spouse, and the dependents is allowed as a deduction, where above the line in form of deductions, adjustments to arrive at adjusted gross income. But please remember, as I told you, that this amount will reduce your taxes but not give you refund. So the amount of deduction that you get here is limited to the earned income which is derived from the business for which the insurance plan was established or the taxpayer's self-employed income. So typically we're talking about, why are you taking self-insurance? You're taking self-insurance because you're running a business, and if something happens to you, there'll be something, the business will suffer. So they're saying either look at that business and say, okay, how much is the money that that business has offered, and you can take the health insurance deduction only till that extent. Or on the whole, you take your entire self-employment income and make sure that your health insurance deduction does not exceed that. Please remember that the moment you're eligible for an employer-sponsored plan, in that case, either you or your spouse, so as a family, if you had the option to pay for health insurance through your employer-sponsored plan, and you chose not to exercise that option. So whether you chose or not chose is immaterial. Whether you had that option is most important. So taxpayer who's eligible for employer-sponsored plan by his or her employer, or an employer of a spouse or a dependent, will become ineligible to take this deduction. So in very simple terms, let's say I am working for a company and I'm also having a startup where I'm working as a self-employed. If I am eligible to take a health insurance plan by my provider and I opt not to take it, I will still not get a deduction under here. Or if, let's say, my spouse is entitled to get health insurance from the employer sponsored plan, and as a family we opt not to take it and invest on our own, even then it will not be allowed. So you should not have an option to take this from any other source. Then only you'll be getting 100% deduction as over the line deduction. Now see, this is something which is done in great details in part 2. We are going to dig this in a much bigger details or a deeper level when we go to part 2. Right now, just look at it that if you're a self-employed and you're sponsoring your own retirement plan, there are various different kinds of plans that are available to you. You could take any one of them. There are different plans, the simple IRA, the simple 401k, or maybe the KO plan as we call it. We call it KO plan or the SEP IRA. Again, I'm not getting into too much detailings on this. We are going to get to it and dig very deep when we are going to go to part 2. Right now in part 1, all you need to know are certain limits and how does the formula work at a very rudimentary level. I would not want you to put a lot of attention on the calculation part, because when you look at the questions that they might throw at you from this section, you will see that this is not the area where they're getting too much into the calculative aspects. So if I'm looking at a SEP KO plan or just a self-employed KO plan, it is typically used, or it is typically of benefit to those employers who have small businesses with either just one person or typically no employees. How much is the maximum that you could get this? Again, this is an index figure that keeps changing every year. But for the year 2025 IRC code, we say it's either 25% of your net self-employment income or 70,000, whichever is lower. Now, there is a key here, which is when they say 25% of net employment income after considering this deduction, then it becomes a calculated loop. So the formula that I would want you to remember is this. What would you do? You will take your net self-employment income. Please take care of the word net. So what is net self-employment income? You take self-employment income and then you deduct half of your self-employment taxes. You saw this? So you take self-employment income, you deduct half of your self-employment taxes. What you will get is a net self-employment income. You simply take 20% of that figure. So if I look at it, the formula is what? It is lower of 20% of self-employment income minus half of self-employment taxes, or $70,000, whichever is lower. That's it. You need to remember only this. Then there are two other plans. One is a simple IRA plan, which is also termed as savings incentive match plan for employees. This is typically suited for larger businesses which has not more than 100 employees. And here the deduction that you could take is either the entire amount that you would get from your self-employment income or 16,500. Now see, there are certain levels here. The moment you go higher up in your age level, the higher age, so the older you are, higher is the deduction that you could get through. And there's something called the employer. I am not getting into technicalities in EA part 1. We will get to this when we go to EA part 2. The only reason I have put it all in one slide for you guys is to help you understand that these are the different kinds of self-employment retirement plans. The ones which are most tested in the EA section would be the SEP plan. And then there is a simple 401k, which is a defined contribution plan. This is for typically people who would just work on their own. They would have nobody else who's going to be working for them. As an employee, you could get 100% of the compensation that you're paying, or $23,500. You would also have something called a catch-up contribution. So if the moment the amounts are, so I am not getting into a lot of technicalities here. Let us go to it at the time and we will get there. As an employer, there is a deduction that you get here. What is that deduction? It's 25% of your net self-employment income after this. That means basically self-employment income minus half of self-employment taxes into 20%, or again 70,000, whichever is lower. So just mark this and this for the time being, and the provision is exactly the same. You take your net self-employment income, which is what? Self-employment income minus half of self-employment taxes. You take 20% of that and you compare it with 70,000, whichever is lower, that's the deduction that you could get for self-employment retirement. So again, we did whistleblower, we did IRA. S stands for self-employment deductions for 1/2 of Social Security, for 1/2 of Social Security taxes, 100% of health insurance paid for yourself, for your spouse, and for your dependent, and retirement. Let's just crack a couple of questions from this area to help you understand this topic better. Look at this question. The call of the question is, what is the maximum annual contribution deduction she can take? D has a net self-employment earnings of $140,000 before the deductible part of her self-employment taxes of $10,000. So this is actually half of self-employment taxes, because you're saying it's deductible part. So when I look at net self-employment income, and this will be 140,000 minus half, and they've already given me the deductible part. So it is $130,000, and then I multiply it with the adjustment deduction for the contribution is 20%. So 20% of $130,000, which is 26,000, or 70,000, whichever is lower. I take the lower of the two, which is 26,000. So the answer becomes $26,000. So this is just the very simple snippet of how are you going to calculate these taxes. If I'm going to look at the next question, see what total amount is deductible in arriving at adjusted gross income. K is a self-employed consultant who reported net income of 60,000 on his Schedule C. So your net income becomes $60,000. During the year, this guy paid 6,000 in child support. Please remember, child support is never taken as a deduction. It is always alimony. That too, if it is before the divorce decree, which was signed till 31st December 2018. Child support and your property settlements are never deductible items from the payer's perspective. So I know this is not relevant. I look at alimony. I know it is going to be a deduction. Why? Because it's a pre-2019 divorce. I take medical insurance premiums. So I know medical insurance premiums are allowed 100% for a self-employed. We have self-employment taxes. I know I'm going to take half, the employer's portion only. So half of 8,000 becomes 4,000. And then we have 3,000 to IRA. And then we have IRA contribution. Unless and until anything else is given, you're going to assume that this is a traditional deductible IRA. I know I can take it till $7,000. I'm going to take it till $3,000. So what total amount is allowed as a deduction? So they are they're asking us to give them a total of this figure. So I add this up, it comes to 7, 4, 4, 4, 8, 3, 11, and 7, $18,000. So the answer to this question becomes $18,000. Now I look at the next question. The question says, since this expense is not deducted on Schedule C, what amount can they deduct as a self-employed health insurance adjustment for years 1 and year 2? So they are asking you, what is the health insurance deduction? So where are we? We are on gross income. From gross income, we have to deduct the adjustments. And I know that one of the item of adjustments is self-employed health insurance. So the call of the question is, how much will this figure be in year 1 and in year 2? For years 1 and 2, Mark and Jennifer Sullivan, husband and wife, paid health insurance premiums of $3,600 each year. So they have paid $3,600. So this is the amount that was paid each year. Mark was self-employed with net profit of $75,000 in year 1 and $90,000 in year 2. Jennifer was unemployed in year 1 and then took a job in January of year 2. Through her new job, she was eligible to join a subsidized family health plan but declined. Now, I know the rule says that the moment one of the spouses is eligible to avail of the employer-sponsored retirement plan, FICA insurance plan, we are not allowed to take the health insurance deduction. So I know in this year, so this is allowed as a deduction, nothing in year 2 and the full amount in year 1, right? Because I can get the full amount because there was one self-employed individual amongst the two and nobody was covered by the employer-sponsored plan. So I know that the answer to this question would become B, which is year 1, $3,600 and in year 2, nothing. We take the last question for this topic, which says, self-employed individuals may deduct what portion of their self-employment tax as an adjustment to income? So I know it is 1/2 and that 1/2 represents the employer's share. So I know for sure that the answer to this question becomes B, which is 1/2 of the self-employment taxes, and that too that represents only the employer part. So with this, we complete the part that is going to be on self-employed. 3 deductions: self-employed FICA, half of the FICA. How do you get that? You take your full self-employment income, reduce half of self-employment taxes, you get your net self-employment income into 20% or 70,000, whichever is lower. Then you go to self-employed health insurance, 100% for yourself, your spouse, and your dependents, provided neither you nor your family members or your spouse is eligible to avail of an employer-sponsored health insurance plan. And the third is self-employment retirement. So self-employment retirement is typically you take your self-employment income, reduce half of self-employment taxes, the total figure into 20% or 70,000, whichever is lower.